So why are the markets down? The answer is there are more sellers than buyers. All right, but why is that? So there's some interesting data. I don't get too bogged down in the data because there's so many indicators and so many different things. I was kind of cracking on a lot of the alphabet soup folks, and there's some genius investment advisors in the world. Some of the smartest people in the world. You show me like a really high-end tier one venture capitalist. They're some of the smartest people in the world, often. Same with tier one hedge fund people, private equity people. Some of these big firms, the heads of the firms are billionaires, and the partners are multi-deca millionaires or centa millionaires. And even the directors and stuff make millions and millions of dollars. They're top of their game. It's very, very competitive, obviously, because of the high compensation. And they attract some of the best and brightest people in the world. People right out of, I know a firm real well that I like a lot. And of the 75 partners, I think 72 of them have Harvard MBA, which is very competitive. Doesn't mean you're necessarily smart. There's midwits who have a Harvard MBA, but overall, it's a pretty hard thing to get. And not only that, but they tend to be like they were Eagle Scout and captain of their team, and they D1 athlete and everything else. And there's a lot of firms like that where you have kind of the best of the best in the world. These high achiever type of people that do well in finance. Vivek Ramaswamy is a great example. He is a billionaire now. I was fortunate enough to get to know him during his presidential campaign. He's not a normal guy. He's extraordinary. He's an extraordinary guy. He went to Yale. He went to Harvard. He was kind of top of his class. It's like the smartest people growing up or in your career or in your life. Even if you're in finance, he just excelled. While he was going to law school at Yale, somebody told him, they said, "Wait, if you really want to be a good activist and do well in the world to make a change, you got to go make money." So he goes and makes $50 million. And he didn't come from that kind of wealth. So, he's a good example of the kind of like extraordinary achievers that you'll see in finance. But there's also a lot of midwits too. I mean, there's some real dumb people, and some of them have the alphabet soup, and they are geniuses. Some of them have the alphabet. Alphabet soup is like CFP, CFA, JD, MBA, CPA. They have a bunch of initials after their name. And I've seen some that are, they're just kind of midwits, and they overly focus on indicators. There's 50 different indicators that you can follow if you're following market. Well, more than 50, it's hundreds. But I've seen a lot of people. I don't usually see people who do really well when they're focused on all these indicators and all this data. I see a lot of the, people, whatever, they've got a bunch of credentials. And it reminds me of like a Michelin star restaurant where sometimes the food sucks or they add complexity just to justify the fee. So they're like, oh, you have a, seafoam, pesto, pate, butter, whipped on top of the tomato. And it doesn't taste that good. But it took a lot of time. There was one that somebody had a $400 apple that they showed at some Michelin star type of restaurant. And it had like a bubble, and then they pop the bubble and the smoke comes out. That's just nonsense. And they're doing it to justify these high prices because the apple's only worth $1. Lot calmer day today. Here's the water, much more calm than yesterday. So to justify their exorbitant prices, Michelin star restaurants, and some are good. I went to one Four Seasons Disney has a Michelin star restaurant. It was flipping awesome. It was great, really, really good. But I've been to other ones that are, they're just like the cliche, a bunch of silly, weird food that's not even that. your job is to make your food taste good. And your job as a money manager is to make money. And a lot of them, fees are high. Money managers make a lot of money. And so to justify their fees, if you're not great at making money, if you don't have that talent, they will do all kinds of presentation type of things similar to an overpriced restaurant. And part of that is data. So they'll go into the clients and they'll say, I knew a money manager who had a bunch of computer servers, and that they put in there right as you came in their office, and they had them behind glass, and they didn't even know what the servers did. They just looked fancy, and the clients would see it when they came in and say, "Oh wow, look at that! It's $1 million worth of computers behind glass. It's all fancy." They'd say, "Look at our servers," and they use that as a sales point. Oh, we crunch data. I've done it as a financial advisor. I used to have some real expensive software, and I'd say to my clients, "Hey, my software costs $25,000 a month. You don't have the same software as me. I'm going to crunch the numbers, and they, using my software." And that was kind of a legitimate thing. But a lot of times people will get, like in the case of this servers thing, people will try and show stuff. So you have people that there's not as much substance behind it. And I see a lot of these money managers where they're like, "Oh yeah, the 180-day moving average and inverse relationship between the renminbi and the euro, and the downward pressure on the cup and handle, saucer chart shows that the other 30-day indicator is, converging with the 90-day indicator on the blah 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 blah." Rarely do those people make money. You're better off being Warren Buffett. Buy Coca-Cola. Hold it for 30 years, And that goes true for business in general. Just yesterday, I was talking about some of the wealthiest families that I know in the world. They make their money doing quite simple things. It's like, oh, we sell the paint to the companies that make roads, and they paint the street lines, and we have 99% market share or 92% market share, something like that. You see a lot of straightforward businesses that are just like, it's like a bell curve, make money, blah, 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 make money. Do you know what I mean? Like the simple, the mid-curve meme, where you have like a simple idea here that a low IQ simpleton would have. And then you have in the middle, oh yeah, indicator this, blah, 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 blah. And then you have over here. So I think a lot of people are losing the forest for the trees with the markets, and you've got to go to first principles, which is the point that I'm making in this video. You've got to understand, in the case of Bitcoin, for example, what makes Bitcoin unique? Why is it interesting? I think that some of the sellers right now are people who obviously they don't have conviction. Why don't they have conviction? Well, because they're looking at these silly indicators they're somewhere on the mid curve. They're just not looking at what you should be looking at. They're not thinking of it as a world transforming asset. They're thinking of it as a trade, and they're trying to analyze it like they would other trades. And in my opinion, that's not a way to make money. I think you've got to go to first principles and really look at, what this is and why it makes sense for any investment. For companies, I'm pretty simple and old-fashioned, and I say, make money. I was lucky because I started really young in this business. I got my Series 7, I was only 19 years old. And I didn't even know what a mutual fund was. I didn't know anything. And so I had I did two things right. One, I tried to find people smarter than me. So I always sought out really, really smart money managers and stuff like that. And that was easy when I started because everybody was smarter than me and everybody was more educated and I didn't know anything. So I spent a lot of effort trying to find the best and brightest so that I could work with them, copy with them, put my clients' money with them. And then the other thing is I kept simple first principles. When the dot-com bubble started coming about, I'm like, I don't get it. I don't know how to lose $100 million on a business that only makes $1 million a year. I don't know how to do that. I'm not smart enough to lose $100 million when you only make $1 million. I want to make money. So I had basic first principles of, make money. And then when it comes to Bitcoin, decentralized. It is a better form of money that is different than the old system. So keeping with those core basic first principles, I think is the recipe for investment success. Everything else is noise. Have a good philosophy, stick with it over time, and you have a better chance of doing well than not.